Hey everyone, welcome back to Upside Down Data. In this video, we're going to take a look at the upcoming Bitcoin monthly close, which is coming up tonight. And we'll also take a look at the weekly that just closed yesterday. We have these two important closes, one after another, and so we'll see what we can learn from them. Before I jump into that though, I want to reiterate an announcement that you may have heard about or you may not have yet, which is that we're working with Jay from Daily Crypto Analysis to build a website that's going to host lots of useful data for you, including the upside downside potential indicator, not only for Bitcoin and Ethereum, but for the 25 other assets that we are monitoring using the UDPI right now across all three timeframes, as well as the trend confidence indicator and the momentum bias indicator, which we developed here on the channel at Upside Down Data, and the DCA index, which is Jay's risk indicator as well. So that's on the way. It's going to take a little while to complete though. So in the meantime, we wanted to make the Bitcoin and Ethereum UDPIs available to you sooner. And so what we're doing is we just put out a survey, just launched this yesterday, a very short survey, about 5 minutes, and it's linked in the description below. And if you complete the survey sometime in the next week, by next Sunday, March 6th, then the following day, March 7th, Monday, we're going to email you a link to this spreadsheet. So this is the Bitcoin and Ethereum UDPIs for all three timeframes. And this is going to be live for 2 months from March 7th. And if you'd like to access this for free, all you've got to do is fill out that survey. It's a pretty straightforward survey, just asking you a little bit about yourself and your interests, experience as a crypto investor, and also for a little bit of feedback for us about the channel and also about the website. So as I said, that's in the description below. And we look forward to hearing from you. We take your feedback really seriously, so that'll be great to hear. And we're excited to finally be rolling out public real-time access to the UDPI. So this is the beginning, and even more is going to become available in time. So stay tuned for more information about that. But if you don't want to wait and you want to get access to these, make sure you fill out that survey. So with that said, let's go back to the price chart. This is the monthly for Bitcoin. And this is a really important time frame that we don't actually pull up that often because we tend to get absorbed in shorter term movements. So oftentimes a lot of analysts don't really zoom out that often more than the weekly, let's say. But the monthly is really critical, and it's closing tonight. And as you can see, it's looking like it's going to close green, most likely, barring a pretty enormous move back to the downside in the next few hours, which seems quite unlikely. It looks like it's probably going to close green. And in doing that, it's going to end this 3-month streak of red candles. It's been a heck of a 3 months. I mean, the volatility even within these candles has been a ride. The uncertainty in the macro context has been just incredibly intense and incredibly diverse. I mean, we've had inflation be the one and only topic that people could talk about for a little while. And now it seems like that's not on anyone's minds anymore, given the Russian invasion of Ukraine and the obvious and extensive economic implications of that. And so now that's the major source of uncertainty. And yet through all of this, the price action has basically been conforming to this upward sloping channel for the last approximately 13 months, since the end of January of 2021. What happened there was Bitcoin pumped up into the lower 40Ks, got rejected from that region, came down to retest 29K, and then bounced from there. And that defined the lower bound of this channel. It pumped up in the spring, as we recall, and it defined the upper limit of that channel. It had that kind of rounded distribution top. It spent a lot of time up there and could not punch through the upper bound of this channel. It came back down in the summer and respected the lower bound of this channel. And then in the fall, pumped back up, retested the top bounds of this channel. And now we've just in January and February come back down and retested and respected the bottom of this channel once again. And so we have multiple retests. We have multiple touches of both the upper and lower bounds of this channel on a macro time frame, which are key criteria when the question is, how seriously should we take a channel, or how seriously should we take a trend line? The more touches, particularly over a large time frame that you see, the more potentially diagnostic a trend line or a channel is likely to be. And so, if you interpret it that way, then where we are right now is about to close green in the bottom part of the channel. And to oversimplify a bit, when you're in the lower part of the channel, your bias is to go long, to expect upside. When you're in the upper part of the channel, your bias is to go short and to expect downside. And that simple heuristic, that simple strategy would have performed very well over the last year plus. And so maybe it'll continue to perform well now, even if we're not about to go and make a new all-time high, or even if we make a new all-time high that's just ever so slightly above the previous all-time high, like we did back in the fall, that would still suggest that upside is likely from here, just based on this one perspective. So, that's how to read this channel, is that we're in an accumulation zone. And clearly that also aligns with other information that we have from our risk indicators, from some on-chain metrics, although you can make a case from on-chain data for a more bearish perspective as well, as Jay, for example, did in our conversation with him that we posted just yesterday. So, there's no free lunch, there's no guarantees here, but here is something that seems to me to be very important. This is a sloping line, but it's also important to consider horizontal lines. Some analysts would say that horizontal lines are more important than trend lines because they have a kind of concrete reality that trend lines don't. I mean, if an order is placed at a certain level and it stays there for a while, let's say a big institution places a big order at 33K and is content to just wait there for as long as it takes for the price to revisit that level, then 33K is going to continue to be a support because there are going to be a lot of buy orders that are waiting for the price every time it revisits that level. We're clearly at an important horizontal level here. I mean, the lower 40Ks have in some way been the key level defining this range over the past 13 months. We have, we closed a candle, we closed the July candle right exactly at this level where we are now. We have retested it as support on our way up to that October and November top, and then fell through it again decisively back in December. And so we want to be cautious here, at least on a short term. I think this is clearly an accumulation zone from a long-term perspective, but from a short-term perspective, there's a lot of resistance in this area, and it wouldn't be shocking to see a rejection and a retest of lower levels. So caution is advised, but I think that it's very important to, to recognize the trend that's happening here on a larger time frame, and the fact that we're likely going to get a green close here on the monthly. If we had gotten a red close on the monthly, that would have been the first time that we had 4 red monthly candles close since the deepest of bear markets back in 2018. This is what people were afraid of, this November 2018 candle, which dumped, let's see, the candle body was about 36%. The wick went as low as 43% in a single month. This is what people were afraid of after seeing these first 3 red candles that we just had here in the end of 2021, beginning of 2022. They were afraid of a repeat of this, this 6 red candle streak, which included that massive, massive sell-off in the 4th month. We have not seen that. And I think that we're in a consolidation, and if I had to guess, we're probably eventually going to break out to the upside. But maybe we'll break out to the downside first. We can never be sure. That said, let's take a look at the weekly, because the weekly is also important. A lot of people use it to make decisions about their investing. So let's take a look at the weekly here. We just had a close yesterday. And what did we see? Well, we saw that the price bounced off that bottom level during the last week, during the lower bound of this channel, and formed what you could loosely call a dragonfly doji. In a previous video a couple of weeks ago, I talked about this gravestone doji. That was 2 weeks back, and a gravestone doji is when you have a very small candle body at the bottom and a long wick to the upside, which indicates a rejection from the upside. But a dragonfly is the inverse of that. And that's when you have a small candle body and a long wick to the downside, which indicates a rejection to the downside and buying pressure. Now, this isn't a prototypical dragonfly doji. We do have a wick to the upside too, so there is a little bit more indecision there that's evident in that weekly candle. And yet still the long wick to the downside and the fact that it perfectly touched the bottom part of this channel, I think is quite noteworthy and is a bullish sign.